Welcome to the Chrisman Commentary, daily mortgage news podcast. I'm your host, Robbie Chrisman. Topics on today's episode include the picture recent economic data is painting, my interview with EPM's Phil Mancuso on his journey in mortgage, winning business in this environment, and lessons in leadership. And without much in the way of headlines, let's see what's on tap the rest of the week. Thank you to Wholesale Mortgage Direct for sponsoring today's podcast. Their mission is to deliver high-demand, innovative products unique to the wholesale industry, including My EQ Now, which is a one-of-a-kind traditional HELOC platform. Looking for innovative HELOC, non-QM, and or reverse options? WMD is your trusted partner. Recent economic data paints a mixed picture of momentum. Imports are slowing sharply, with inbound container volumes in major U.S. ports falling for the second consecutive month, highlighting the growing impact of Trump's trade war. New home sales rebounded in June, but the broader market remains sluggish due to high mortgage rates, poor affordability, and rising insurance costs. While listings are up in booming Sunbelt metros, putting mild downward pressure on prices, they remain constrained in much of the rest of the country. Without much in the way of news to open the week, we can look ahead to later this week, which is expected to show early July business sentiment surveys ticked higher on optimism around the 2026 tax cut, though they also suggest that input cost inflation continues to run hotter than in recent years. Durable goods orders likely fell back in June after a temporary boost from aircraft demand in May. For today's interview, I wanted to welcome to the show EPM's Phil Mancuso to talk about his journey in mortgage, winning business in this environment, and lessons in leadership. He's president, CIO, and partner at EPM, and normally I read his bio, but actually in the first question here, I asked him to go through his career.
Actually, I want to start today by talking about your career and how you got to where you are with EPM. Obviously, they're a high-ranking executive. How'd you get your start in the mortgage industry? What were your first several roles, and how did it lead to where you are at EPM today?
Boy, it's hard to remember that far back, but it was an ad in the Bergen Record for telemarketing. Make $20 an hour, which wasn't really the job. So, sort of first experience with selling the sizzle, not the steak. But, it actually, luckily, ended up being more than $20 an hour. It was just telemarketing, 6 to 9, 4 nights a week, Monday through Thursday. Took that to a position as a loan originator after about a year or so of doing that. And I've told this story before, but it worked out. I was making $500-600 a week in 1988 and 1989, working 12 hours, making $50 an hour plus, just telemarketing out of a reverse phone book, which was a thing that existed all those years back. And I said, hey, I think I could be a loan officer. The sales manager agreed. And here we are. I think my first position in so-called management came right around my freshman year in college. Sort of cut my teeth as a loan officer the summer year in between high school and college, and a full-time loan officer right around September of '90, and then went on from there. I think my first big break was maybe my second, role as a manager or an executive in the industry. It was at Parkway Mortgage in the mid to late '90s, where, for those who are unfamiliar, they were exclusively a subprime company, and I started a prime lending platform for the organization, and this new thing called DU and LP that went on to revolutionize the industry was a big break for me. I was a very early adopter, and it was a great opportunity to take a company that was largely, if not wholly unfamiliar with originating conventional loans, and just sort of was able to transition that platform pretty seamlessly to a prime originator, and then kind of went on from there. 2002, met up with the original vice chairman, or I should say the vice chairman of the original Money Store. And he had started a company for his son. And a couple of years later, we bought the Money Store name from Wachovia, joined that company. They were a broker in one state. Within 3 years, we were a national lender, number one lender on bankrate.com, fully retail. Started wholesale there, maybe '06, '07. Navigated the financial crisis. That's where I met Eddie and his original partner, KP. They were a branch for us for a short period of time. And, landed here at EPM. Eddie and I had, sort of a chance conversation, although we did keep in touch. July 3rd of 2013. And here we are at EPM.
Holy smokes! Long time in the industry, and you're certainly a better capitalist than me. I started my first job probably 25 years after you did, but I was making less than $7 an hour working construction as the low man on the totem pole. So good on you there. You've been at EPM, it sounds like almost 13 years now, which I think is a testament to the culture that Eddie's built and you've helped build as well. What about the company has kept you around? What keeps it interesting? What keeps it fun? Those sorts of things.
Yeah, look, I'm a relationship guy, and certainly I would argue that the main driver in terms of keeping me around is my relationship with Eddie. We've had a good one over the years, a good one from day one, and in a lot of ways, our skills are complementary. I think where we overlap, we tend to agree. So that sort of makes it easy, and I think that, there are elements of both he and I that, where we can want to control things, but I think a large part of what we do is trust but verify. So we have, very, not to overuse or use a word that's overused, synergistic, but, we have, I think a very synergistic relationship. So, there's not a hell of a lot of checking in, and, it's more catching up. And I think that gives us the room to do what we do. And that tends to make for a happy existence. And thus far has made for a great partnership.
That's great to hear. There's two things that you touched on, one from each of those answers that I want to follow up on. The first would be, and being in the industry for so long, you've obviously seen cycles. How would you categorize the current environment? And I mean that a lot from the sense of mindset of an originator out there. Obviously, I think some of the hope that rates are going to drop precipitously has waned, and it's kind of nose to the grindstone. But you obviously have a much better finger on the pulse than I do. What is the mindset of an originator right now?
Yeah, well, right now is an interesting word, right? It has certainly matured over the last year and a half, 2 years, no doubt about it. I would argue that the mindset of the average originator March, April, May of 22 was horrible. And I would say that we're not quite where I'd love to see us, but we are better. And look, we could spend 3 hours just on this topic. I think to Reader's Digest it, this is an industry of cycles. So you are setting yourself up for failure if you don't have the ability to understand, maybe even front run. I'd love to see you front run it. I think that's been a huge part of my success in this industry, is that I've tended to be able to see these cycles coming, but then certainly cope with the cycle. This is no different than any other cycle I've seen in the nearly 40 years I've been in the business. It's just gone on longer. And I think that's been where the average originator and the average company has struggled with it. But this is something that I've seen, gosh, I don't know, 15 times. right? 20 times these rate cycles. So I think ultimately the success within the cycle is part seeing it coming, part knowing how to navigate it, part preparing for the next one. And ultimately, that is just, I would argue, rooted in being a professional. And I think that the folks that lack the level of professionalism that I'd like to see, are maybe refi only. Maybe they're purchase only. Maybe they're boots on the ground only, phone call only. So they just don't know how to deal with the nuance of how do I speak with a realtor at the office level? How do I hammer the phones when the phones need to be hammered? How do I have the cash out refi conversation? And so on and so forth. So the more you know about your job, the more you know about the industry, the more you know about how to be a professional. It's just the better you are with dealing with the nuance of where you're at, where the cycle is at. It's still a mortgage. And I'll just also add this is that's also where I think we mess ourselves up. Maybe it's in this endeavor to feel more self-important or what have you, is like we overcomplicate this. A mortgage is a mortgage. TRID hasn't changed that. The so-called 2010 GFE didn't change it. 2% rates didn't change it. 20% rates wouldn't change it. A mortgage is a mortgage. It matures, it regresses, it ebbs and flows. And so you might have to have a slightly different approach, but it's still a mortgage. And I think keeping things simple allows you to be somewhat forward thinking, allows you to be nimble, allows you to be proactive when necessary, reactive when you have no other choice. But it all comes back to being a professional.
Yes, and it's always puzzled me in this industry why companies or individuals act like drunken sailors on shore leave when times are good. They're not
Yeah.
preparing for anything except, hey, loans are falling from the sky and woohoo, here we go, sort of thing. So that's an interesting point you make. I was going to say that I never fully finished uh, what I started saying there previously, and that was the second thing that came up was you mentioned the importance of relationships, and whether that's working with your coworkers or working with borrowers, it's a relationship based industry. You cited your relationship with Eddie, but I want to focus on the relationship aspect of the business from a sales perspective. And obviously this is kind of the hot button question right now with all the new technology coming out, AI. Yeah, people are worried about being replaced, maybe to a lesser degree than they were a couple of years ago. But can you explain the importance of relationships and how that's not going to change even with the advent of technology that's going to make for a much more efficient mortgage process?
Yeah. I would love to and follow me on this one. I'm going to start the answer with something that's a bit obtuse, and I've repeated this quote a million times. When the ghost of Obi-Wan Kenobi came to visit Luke Skywalker at Dagobah, Yoda's planet, and Luke looked at him and said, you lied to me. You told me that Darth Vader killed my father. Ben looked at him and said, many of the truths that we cling to are based on a certain point of view. I think where individuals and businesses get it wrong most often is in framing, is in perspective. And so I think all of this is wrapped in a fairly neat bow, whether you talk about business opportunities, relationships, it's all interrelated and it's all driven in many ways by framing and by perspective. And if I just recall the relationship that I talked about regarding Eddie and myself, he came to me very early on and said, hey, we want to start wholesale. We've tried, we don't know how to do it. Can you do it? And I did it. And he trusted me to do it. And, he came to me a few years back and was talking about culture and social media, and we got to get into social media. And I just didn't get it. And like, okay, dude, run with it, right? And he did. And here we are. And so, I think about where relationship is it breaks a tie. And having the framing and perspective, you can't be so all in on relationship whereby you begin to abuse the relationship. It's not all about it. You can't be terrible. Can't have the worst rates and the worst service and the worst tech. Oh, but I'm your buddy, you know. And so I think that you have to have the perspective. There needs to be the framing of, I've got to be good enough to continue to hold up my end of the relationship. But what relationship does buy you is the benefit of the doubt. And so I strongly recommend the cultivation of those relationships so you can be honest, so you can be vulnerable, so you can be exploratory in the next step. What are we getting right? What are we getting wrong? What do you need? What are we giving you that you never thought you'd get? And what aren't we giving you that you need? And when there is that opportunity, or better said, maybe that sort of misfortune of where you might be in a position to lose, that relationship might deliver the conversation that will help you not lose or maybe win. And so that's, to me, how I've looked at relationship. It's not the end all be all, but it's the linchpin of success, perhaps.
I think that's a phenomenal answer. Whether it's getting your foot in the door or kind of keeping it there or kicking it open, depending on what stage you are. I think that you put it very well. I want to go back to something else you said in a previous answer, and that's talking about preparing for what's coming. What should companies be preparing for in this day and age? And maybe that, obviously, that's a very general question, because I could be insinuating rate volatility with the current political environment. You could talk about the rise of technology. You could talk about how companies are working on user experience or their operations. But when it comes to preparation, what's EPM preparing for? What's the focus? How do you stay on the balls of your feet?
Yeah, and I've said this before, by the way. Literally to a year to an event, my personal and therefore, for the most part, the organizations that I've either led or been a part of, there was one exception, and it was Parkway, and we just got that platform off the ground a little bit too late to sort of save that company after the sale to Salmons. But my best years have always been in the busts, not the booms. And so, in terms of that preparation, it starts with you. It starts with not being so cocky to think that you guys and you yourself have all the answers. And really, I can't tell you how many times, we've been, and a lot of it starts with being transformational and not transactional. And so consequently, it's sort of like, well, wait a second. If we keep working on ourselves, almost by default, we're going to be prepared. Almost by default, we're going to be able to react. Almost by default, we're going to be vulnerable enough to say, hey, we've got this wrong. We need to fix this. And that's something that Eddie and I are always talking to the executive team about, is that, no one here is getting fired unless you're knowingly doing the wrong thing. If you're negligent, if there's malfeasance. But if somebody made a mistake, if somebody did all the right things and had a less than, perfect outcome, Let's talk about it and let's grow from it. And I think that that's where a lot of companies get preparation wrong. And you can't control the outcome all the time. So what am I worried about? What should you be worried about? What are we worried about? I've got no idea. Your biggest threat is something you're not even thinking about. That's what we're thinking about. We know ourselves, we know our competition, and so we already are doing the things that we believe we need to do. Good market, bad market, moving market, stagnant market. I think that the working on ourselves, the building of a better mousetrap, so to speak, that will help to prepare, will help to insulate against a threat that no one sees coming.
That's a good point. And building that mousetrap is kind of the name of the game right now, which if you are looking at the big players out there, if it's Rocket, you want to go purchase Mr. Cooper. If it's Freedom, you got almost a $400 billion servicing portfolio. Union or UWM is always making moves to keep brokers happy, that sort of thing. What's the focus at EPM when it comes to winning business, maintaining market share, growing market share, those sorts of things currently?
Look, where I would argue, and certainly we, I think, as an executive team or Eddie and I as ownership would argue that EPM is different, is that the so-called winning of the business tends to be a secondary in anything and everything we do. We truly believe that success and outcome is a byproduct, not a focus. And so when you look at the event that we put on annually, TAG, there's no solicitation. There are no strings. As a matter of fact, I mean, we had competitors on the stage this year and have had them in the past. We put brokers on the stage, in some cases, year after year, that have never given us business. And so everything is earned and nothing is expected for us. And that we truly believe is a separator, I have to say. And so, that will continue to be a focus of ours. Continue to drive ourselves. Now, certainly, do we put ourselves in a position to succeed? Do we have pointed conversations that are absolutely outcome driven? No doubt about it. But it's more about what aren't we doing? What do you need? What could we be doing better? This is what we see. What do you think? That is more our approach versus we think the market's going here. You should be doing this. We're going to give you that. We're also, I think, pretty intentional about trying to avoid shiny new objects. We are thoughtfully and intentionally consistent. I think that's a separator for EPM. We are consistent in our pricing. We know what our margin needs to be. So when our brokers go, oh my gosh, you were number 1 last week, you're number 10 this week, we didn't do a thing. Respectfully, our competitors play with margin, play with price. That's something I've never done. We know what we've got to make. That doesn't change. I don't believe in chasing the business. When you wonder how the second, third largest wholesalers in the industry close the doors one day, it's because they're lying to themselves and they're lying to their customers about the price that they need to deliver, how they price risk, how they value the asset. That's the greatest weakness in our industry, is the ability to underprice the risk and overvalue the asset. And bad behavior tends to get rewarded. And I think that to go back to a previous question, where this cycle has been incredibly painful for most. And by the way, for EPM, 23, 24 was second and third best years we've ever had. Is that folks have always relied on the next refi boom to kind of pay for, and lie is a big word, but I'll just use it in this context, those lies that they've told themselves about their business. And so, I think that is the message that we try to convey to our brokers. I think that's, one of the values that we try to provide in the business relationship is that we are who we are. We mean what we say, and we say what we mean, and that we're going to have a consistency about us that is going to be outcome driven from our perspective, and that we think we have enough of our finger on the pulse of the market and of our brokers that the byproduct of that should be business and success.
Yes, and you touched on a lot there. I feel like you and I could probably have a separate, complete discussion on capital markets and what's going on there and strategy and those things. So let's save that for another day. At the start of the answer, I was saying you brought your competitors to tag. You also brought T-Pain to tag, which I heard was a pretty good time. So that's neat there. Let me close with this. And I want to talk leadership, both kind of what you've learned over the years about leading people. And notice I said leading, not managing, leading people. Then also, at this point in your career as such a senior executive and accomplished industry professional, where you go to for advice, how you become a better leader.
Yeah. So I do know that you wanted a quick answer on the rate question. So let me give that to you. Just 10 seconds. It's not coming. It was never coming. When you look at where all the production resides, coupon wise, note rate wise, should rates be lower than they are now? I would argue yes. Will they be lower? I certainly expect them to be. I think that the coasts are sort of propping up the data. I think Main Street, so-called middle America, has arguably been in recession for a while now. I think that there's a lot of misgivings about what inflation is, what deflation and disinflation is, and the misunderstanding of all of that, and would love to have a full cap markets conversation. But waiting and hoping for 2% rates, it's not going to happen anytime soon unless something really unexpected and crazy happens. Can't say the chance of that is zero because it's happened like 2 or 3 times in the last decade and a half. As far as what are arguably my principles of running a business, leadership, management, I could speak in sound bites there. Your first loss is your best loss. When somebody tells you who they are, believe them. When somebody wants to give you money, take it. Win big and lose small. Those are sort of the principles that tend to drive my actions, our actions. Do the right thing always. I said this, and Mike Cordes from Nexa has quoted me on this a few times, which I greatly appreciate. And it goes back to the relationship thing, and I feel like my actions are governed by this sensibility, and I believe that a lot of EPM's actions are governed by this sensibility, and it's something that Eddie and I, sort of believe and agree on. And I've said this. Undoubtedly, I care more about my family than I care about your family. However, I always, in business, I will put my family's interests behind yours. there's a nuance there, right? I want to win, and I want to win for me and for my family. But I don't believe that the way to do that is to take advantage of you and your family. And so I'm always going to put their interests first, even though I love my family more than I love yours. And I think that driving principle is how most folks succeed. Who do I go to for advice? I look inward. Charlie Munger, invert, always invert. I think that I look at history and the people that have guided me, those principles. I have to tell you, I go to Instagram. I go to people that, and I don't take what they say as gospel. And that's something I've never done. And I would say that that's a driving sort of aspect of how I get better, is I always look for either the underlying message in things or what I can glean from what people are saying, more so than what they're actually saying. And, a lot of collaboration within the organization. I don't believe in one-on-ones and all these new fads and rages, but what I do believe is in communication, and we talk a lot. And so I'm always trying to get as much information as possible so that we can individually and collectively grow.
A lot to unpack there. I like that you're always trying to improve, and I'm the same way, and we are all looking to support our families at the end of the day. Go back to the very first part of that with rates. Originators always want lower rates. Presidents want lower rates. Rates could be good for the general economy in some ways, probably not good in other ways. But I always ask originators, what do you want to get lower rates? Do you want a big recession? Do you want another pandemic? Like what? It's going to take a lot for there to be lower rates in the sense that you're thinking of, considering just how much of the overall universe out there already has such low rates. If you wanted to get some refinance business or you want to get some purchase borrowers off the sidelines, but we're always hopeful. I had a great time talking to you today, and yes, looking forward to having you back in future discussions. So thank you very much, sir.
Yeah, my pleasure. And that's a great teaser to a cap markets conversation. I don't think that anybody really wants what it'll take to materially lower rates.
Today's economic calendar kicked off with Philadelphia Fed non-manufacturing surveys for July and will be followed by Redbook same-store sales, Richmond Fed manufacturing and services for July, some short-duration Treasury auctions, and remarks from Fed Chair Powell and Fed Vice Chair for Supervision Bowman. Today is 48-hour notification for Class D MBS. We begin the day with agency MBS prices unchanged from Monday's close, the 2-year yielding 3.85, and the 10-year yielding 4.37 after closing yesterday at 4.37%. Let's wrap up with a joke and some housekeeping. A friend of mine attended a funeral last weekend for a fellow who was hit with a tennis ball on the head. It was a lovely service. Thanks again to Wholesale Mortgage Direct, whose mission is to deliver high-demand, innovative products unique to the wholesale industry, including MyEQ Now, which is a one-of-a-kind traditional HELOC platform. WMD is your trusted partner for innovative HELOC, non-QM, and or reverse options.